insurances. There's, for example, the comprehensive insurance. But before you take us through the different types of, motor insurances, explain to us, for someone who wants to probably buy a vehicle and get it insured,
Yeah.
why should I? And how essential is it?
So first of all, it's a requirement by law. If you have a vehicle on the being used on any Kenyan road, it has to have vehicle insurance. So that's the first thing you need to note about vehicle insurance, is that it's not optional. And then the next important thing to note is that you take vehicle insurance to protect yourself against liability and also against losses on your end caused by losses on the vehicle to other people or also damage to yourself.
Well, thank you very much. There are various types of, motor insurance. Now, how does someone
Yes.
get to know the type of insurance he or she should get for his or her vehicle? And is there like different insurances for privately owned motor vehicles and, for example, PSVs?
Yes. Yeah, there are different types of insurances. So the first thing to note is that there are three main types of insurance. So the first one is called third party only. So for the third party only, here you only protect yourself against liabilities where your vehicle causes losses to other people. So let's say your vehicle has hit someone else, that person can take you to court and sue you. That's where that insurance comes in and helps you. The next type is third party, fire and theft. Now you cover the same as the third party, but in this case, you'll also be compensated in the event that your vehicle is damaged due to fire or it's stolen. And then finally, we have the comprehensive. So comprehensive covers all of those, including third party, fire, theft, and also damages caused to your vehicle in the case of an accident. So this refers now to the cost of repair. And then the classes of insurance now are also then categorized depending on the type of vehicle you have. So you have private vehicle insurance, commercial vehicle insurance, which is not for the trucks and cargo transporting vehicles. And then you also have now the PSV, which is the public service vehicle insurance.
Now, there's the concern by many motor vehicle owners. Sometimes you get involved in an accident, maybe. You do have the comprehensive cover, but the entire process or procedure sometimes is I'd say frustrating. Now, if at all today I do own a vehicle, of course, I safe to say I do aspire to own a vehicle one day. Specifically, I don't want to dive deep into the type of vehicle I don't want to buy, but if my car is involved in an accident, sometimes the process and the procedure of getting your car repaired using your insurance is frustrating. Sometimes it takes too long. Then if that is the case, why then should I be paying the insurance money, yet when I'm in need, it becomes difficult to access it? And or is there a certain process or procedure that you have to meet for you to get that particular insurance? All the question should be, is everything covered, or there is a certain because the assessing must be done, of course, to assess the amount of money that will be used in covering the accident or repairing your car. And sometimes if it doesn't meet a certain amount, then they cannot cater for the repairs of that particular vehicle. How does that happen? How can someone go about that?
Okay. So yes, for the claims process, especially within the Kenyan market, it's not as efficient as it's supposed to be, which is a true position. So what you need to know is that the claim process should start even before actually having a claim. By this I mean that from the moment you purchase your insurance, you need to ensure everything is in order. So let's say you've already paid for your insurance. What a lot of people fail to ask for is the receipt. So you can find, yes, you have your insurance, but the insurance company didn't really capture your receipt. So in the event that you have a claim, there'll be a lot of back and forth. So immediately you pay for your insurance, demand for you to have a receipt. So this receipt will be evidence that you've made the full payment for your premium. And then after that, also insist on having a policy document. So within the market, we find a lot of people aren't issued with a policy document. So this document simply stipulates all the processes and all the limitations of your cover. And now once you have this document, you need to go through it and totally understand it, because it will also guide you about the claims and what is to be paid and what is not to be paid. And then after that, now you have the claim process from the point of the accident. So a lot of people here also make a mistake. You're supposed to notify your insurance immediately. And this is not just calling your agent or your broker, ensuring that the information is communicated directly to the insurance company, and recommended use email for track record. So once you send the email of notification, then ensure all your documentation is in order. So they'll have to give you a claim form. So you fill the claim form, get a police abstract, and also attach details of the driver. That's the license and the ID, and send the documents over to the insurance company. And now from there, you can follow up if you have an agent, or directly follow up with the insurance company to make sure the process is hastened.
Well, talking about claims, Mr. Mwangi,
Yeah.
there's
Yes.
there's something known as the cashless claim.
Yes.
Take us through it. And where can someone avail a cashless claim?
Cashless. By cashless, what do you mean?
Can you hear me?
Yeah, I can hear you now.
One of there's in especially under the comprehensive policy, there's a cashless claim. I don't know if you can expound on that.
Cashless. No, it's not a cashless. It's called a cash in lieu. Because cash in lieu, that usually implies that in the event that, let's say you're in a hurry, you can repair the vehicle yourself and now get compensated by the insurance company directly, instead of them taking the vehicle to the garage. So the way that the cash in lieu works, after you have an accident, the vehicle, of course, has to be taken to a garage. So once it's assessed, you are asked for a repair estimate. So you give the insurance company the repair estimate. Once they approve it, they'll give you what is called a discharge voucher. So this is a document stipulating all the parts that you need to replace, the parts that you need to repair, and the cost. So some companies give you an upfront of either between 50 and 70% for you to start the repairs. And once you're done, they do a reinspection. And if they verify that everything which was on the discharge voucher has been done, then they process for you the balance payment.
Now, apart from taking there's, like you've said, the comprehensive policy, there are other add-on covers. For example,
Yes.
Engine protection. Why is it essential to have these add-on covers?
The add-on covers usually just enhance your protection and rather your peace of mind. So these policies are usually standard policies. So you can go from one company to the other. You find the policies are basically the same. So for the additional benefits, these are usually mainly now to cover your specific needs. And one of the most common within the Kenyan market is what we call excess protector. So for the excess protector, this ensures you against paying additional cost in the event of an accident or in the event of a claim. Because the standard comprehensive policy, which a lot of people now fail to note, it does not mean that in the event of an accident, automatically you're supposed to be compensated for the total amount of the cost of repair. There's an amount called excess, which you're supposed to foot on your end. And if you don't want to pay this excess, then you have to insure against that. And then there are also additional risks, such as political violence and terrorism, or loss of use, where you need a courtesy car. So you can purchase this as additional benefits to your cover.
Now, what is the essence? Because there is as well the issue of digital motor certificates, motor insurance certificates.
Yes.
Why is it essential? And
The digital motor.
and as well, you were earlier talking about the issue of claims. What are just some of the grounds that a claim can be rejected by the insuring company?
Okay. Okay. So first, for the digital motor vehicle insurance certificate, this was introduced now to curb mainly fraud and inefficiencies within the market. Because before we had this, you had to physically get the certificate printed for you on a special form of paper. So this limited you. You had to either go to the insurance office or have someone from the insurance office send it to you. And also another thing which it really helped is the case of double insurance. Because before, you could find that the same vehicle has been insured with more than one insurance company. But now with the digital certificate, you can't insure the same vehicle with more than one insurance company. Now, when you come to the claims, some of the important things to note that can make your claim not be paid is you not following the terms stipulated within the policy document. That's why I insisted for you need to have the policy document. One of these is use of the vehicle. So let's say you have a private vehicle insurance, but at the time of the claim, they find out during investigation that the vehicle was being used as a taxi. So then obviously now your claim will be declined because the nature of use of your vehicle and the type of insurance which you have is not matching. So if you want to use your vehicle as a taxi or a Uber or the Bolt, rather than the digital apps, you need to have PSV insurance. So a lot of people overlook those simple things. And then also other factors such as, was the driver at the point of the accident, was it a licensed driver driving? So if the driver has never been licensed to drive a motor vehicle, that claim can be rejected. But in the event that the vehicle, let's say the driver already had a license but it has just expired, in such a case it can be accepted and the claim can be paid. And then also other important things to note that can lead to your claim being rejected is also now the policy on excess. So for excess, the way it works, even if you have excess protector, they give you a percentage of the value of your car, let's say 5%. Here they say that in the event that the cost of repair is below this amount, we won't take it up as an insurance company. So that's why you find many minor accidents cannot be paid by the insurance company.
Well, Mr. Joseph, now, for instance, if my car is, under insurance and, for example, the comprehensive cover, and I end up probably being involved in an accident, and I knock someone down and probably, God forbid, they die. How does the insurance company go about that? Do I get to cover compensate probably the family of the person who's lost his life personally, or the insurance, or will the insurance come in or chip in to help with that?
Okay. So one thing we need to note is that for private vehicle, so what is covered in comprehensive is not the people inside the car. If it's a private vehicle, so what's covered is the vehicle itself, not even the driver. The driver is also not covered. But in the event of a public service vehicle, they have an additional charge in their insurance, which is called public legal liability. Now passenger legal liability. So it covers now the passengers within the car. So let's say it's a taxi or a matatu. In the event that the accident is done and the driver is to blame, the insurance company will step in and cover the costs related now to the damages or other death compensation to your passengers. But in the event that it's a private vehicle and you are to blame, the passengers within your car are not covered within your insurance. But what can happen in the event that another vehicle now has hit you and the other vehicle is to blame, you and the passengers within your your private vehicle, now claim on that other person's insurance as third party. So this is usually a legal process, and we recommend getting the services of a lawyer for you to be able to pursue this.
Now, one more thing. What happens if I've insured my car and within a period of 1 year, I've not made a claim or lodged a claim with my insurer? What happens?
So currently within the Kenyan market, once you purchase the insurance, the event that you don't have any claim during that year, there's no extra benefit that you receive, because coming next year, normally what was supposed to happen was you're supposed to get a no claims discount. But now, based on the pricing which you are currently issuing insurance at, you can't be able to enjoy this benefit. So what happens is that once you're coming to renew your car, if you want to pay less, now you have to value your vehicle again. So let's say last year your vehicle was 1 million according to the valuation, and this year it's 950,000. So then that's when you can pay less now for your insurance. Only the main advantage now of you not having claims is that it does not affect your record on the insurance company. Because in the event that you have a lot of claims or major claims, the insurance company now can penalize you by increasing your premium, or rather your rate.
Now, I don't know if and the viewer as well want to understand if for instance my car is insured, Mr. Joseph, and I happen to traverse, leave Kenya, go to, for example, Somalia. What are the rules concerning crossing borders on matters of motor vehicle insurance?
Oh, so when crossing the border, you need to get an extra type of insurance. So your insurance, in most cases, is generally limited within the geography of Kenya. So if you want to cross the border, you need to get an additional insurance. And for this, you need to also consult with the insurance company. It's usually not a standard rate, and it also depends on how long you intend to stay there.
Now, yes, go on.
Yes, and then also another thing which I wanted to note is that mainly this additional insurance now covers for the liability, that party liability. So in some cases, they may tell you that for the comprehensive, that only works within the geography of Kenya, but the extra insurance will only protect you against that party liabilities in case of an accident in the neighboring country.
Can Mr. Joseph, as the insuring company or the insurer, they have the right to reject a claim. On what grounds can a claim be rejected?
So first of all is in case of fraud. So in the event of investigation and they find out that it's a fraudulent claim, that's the first ground of rejection. So they can reject your claim from there. And also another thing, in terms of rejection of a claim, is that if the claim conditions are not in accordance with what is stipulated in the policy document, then the insurance company here has a right to reject your claim. But you find that the usually statistics on this, very few claims out of the reported claims are actually rejected. So what you find is that it usually takes a long process for you to be able to verify the actual information, or rather the actual grounds on which to reject these particular claims.
Well, finally, the auto insurance. There's the auto insurance. And
Yes.
I'd want to know, will the insurance company, or can the insurance company, of course, give a payout equal to the value of my vehicle?
So what happens here is that in the event that you had comprehensive insurance, when you have an accident, in most cases where the cost of repair is greater than 50%, the insurance company declares your vehicle as a write-off. So by saying a write-off, they mean that it's not feasible for them to repair your vehicle, and they opt out to compensate you the value of your car. So this value is in accordance to the valuation report, which you should have done before purchasing the insurance. So let's say, according to the valuation, the value of your car was 900,000. So now the company has to compensate you this 900,000, but you on your end, you have to submit the salvage, which is now the damaged vehicle, and also copy of the logbook and do the transfer to the insurance company, and then they can dispose it. They can also give you an option to retain the salvage and reduce the amount based on the valuation of the salvage, the amount which they compensate you.
Well, finally, Mr. Joseph, still on matters auto insurance. If that particular policy expires, before they renew that particular policy, what is the process? Do they have to come back again and, of course, reassess the value of your car, or how do they go about it? Finally,
when it comes to renewal, most cases, a lot of people fail to do the valuation again, but it's recommended. It's good practice for you to do your valuation every year, because you're not the person paying for this valuation. The insurance company usually covers the cost of the valuation. Now, once they pay for your valuation, this will affect the premium which you pay, because in the case of comprehensive insurance, you pay as a percentage of the value of the car. But for third-party insurance, you can simply renew every year because it's not based on the value of the car. And also an important tip which I can make is, if you need more information about claims, there is a website, www.claims.co.ke. So it's a general website mainly focusing on the Kenyan market. So you get specific information related to the claim process, and you can also get a better understanding of how to handle your claim. And in the case that you need, let's say, legal assistance or legal follow-up, there's also a portal which connects you now to the lawyers who deal with insurance matters. They're within the Kenyan context.
Well, thank you very much, Mr. Joseph Mwangi, for joining us this particular morning.